Michel, Amar, CEO, Digi Power X. Thanks so much for joining us on Wall Street Unplugged again.
Good morning, Frank. How are you today?
I'm doing okay today. So I'm looking forward to getting an update. The last time I think we did this was a couple of months ago, and I know you just announced the U.S. Data centers and the stock fell, and you came out and had a great report, and the stock went up tremendously since then. But I want to talk about so much that has happened, including the Cerebras mega deal. And this is a 10-year colocation contract with Cerebras systems worth 1.1 billion, with the ability to scale to 2.5 billion, right? So talk about that. I guess I'd love to learn the insides of it, right? It's an amazing deal, but is there a lot of people that are bidding for this? Are you seeing demand for hyperscalers? And how did you decide where Cerebras is perfect for you guys?
Good morning. So yes, we are very, very pleased with what we accomplished so far this year. It was definitely a milestone and a pivoting moment for us. We worked very hard to get this contract. Now we get the validation that we are in play in the AI infrastructure build. So far this year, we CapExed close to $100 million, all self-funding in Alabama. And we are in very good shape to deliver phase one December this year, which will be an incredible accomplishment considering we signed in May. We locked in all the long-term equipment. We are, as we speak now, building the data hall. We should be in good shape for December. And we will address phase two and deliver phase two by the end of March next year. And then we have a 40 megawatt IT load, state-of-the-art data center with the latest chips from Cerebras, which is one of the best chip maker for inference these days. We believe that the data center alone is worth anywhere from $25 to $30 million a megawatt. So the data center finish is worth $1 billion to $1.2 billion. I read that Blackstone paid $27 million a megawatt a month ago for a data center. So basically every dollar we diluted in every stock we diluted in the past is serving a purpose and creating added value 3x to 4x. So I think it's very important for the investors to understand that we are creating tremendous value by building that data center. Then you have a contract that has an additional value. $1.1 billion to $2.5 billion contract has also a tremendous value on top and beyond the data center physical value. So we are very, very proud, happy about what we are doing now. We are getting into the world of AI infrastructure, and we found a very solid partner that we can develop for future project as well.
So it's a huge difference between 1.1 billion and 2.5 billion, right? With extensions. What do the extensions include? Is it further building out the Alabama plan? Is it, how do you get that contract to 2.5 billion? It's literally more than double the 1.1. It's a huge deal, right? And it says, and I see this with a lot of these contracts that are going on with some of the companies where, they'll sign and say, okay, with the extension of a possibility of, 2x plus that contract. How do you get to 2.5 billion? Because that changes the landscape of your company if they do extend to 2.5 billion.
So basically, after 10 years, when you have, Cerebras is the tenant, having billions of dollars of GPUs inside that data hall, a full organization trained they'll go nowhere. They'll stay there because it's much more convenient for them to renew than to change a location.
Yep.
So an happy tenant will never leave the location. They'll stay there for economic reasons, for efficiency and convenience. So they'll stay there, and usually that's what happened to a tenant that has billions of dollars of equipment inside the data hall.
Now let's talk about, your stock price has been coming down. You had great news on it, right? I mean, we're in early for our subscribers under $1.70, right? So, but the stock has run up after this news tremendously to $8, and now it's come back down. And I think recently people are talking about, New York, which accounts for, I'm not too sure if it's a third of it or maybe 25% of the total maximum, right? Whatever, a little bit over 400 megawatts of power for you guys. And then you had the governor come out and say that, an executive order pausing construction of data centers for 1 year. Again, a lot of political reasons. They say that to see the effects of environment, energy, and stuff like that. Talk about that. Are you guys did that impact you? Because that has hurt your stock in the past few weeks. I'm interested to see it. You guys grandfathered in. You guys been talking about this for a while. How does that work for you guys? Does it impact you?
So two thought process here. First, we always been under moratorium in the state of New York. There's always a moratorium. I think in 2022 there was one, and we are definitely grandfathered. If you read the moratorium, the state moratorium, it's for two specific type of data centers, brand new data centers application. So the ones that are pre-existing are not affected by the moratorium at all.
Wow.
And two, for the new one, anything that's 20 megawatt and up. So you have two conditions. So we've been running, we have two locations in New York, one in Buffalo, one in North Tonawanda. We've been running in Buffalo for 10 years, or even maybe 10 to 11 years. So we are definitely grandfathered. And we've been running for almost 5 years in North Tonawanda, so we are definitely grandfathered. Now, what we cannot do with that moratorium is expand our footprint of energy. So if we were using 50 megawatt or 60 megawatt in New York, we cannot use 100 megawatt for next 12 months. So, but if we use 50, 60 megawatt in New York, it will result in a $1.5 billion contract as a colocation. And if you do GPU as a service, 10x. It will result in multiple $1 billion contract. So we are okay for the next 12 months to develop what we are allowed to develop, okay, and meet our plan. So I want everyone that's very concerned by New York State that we've been dealing with this type of moratorium forever, and it's always there. They always renew it. Now they try to control newcomers. It's actually the state is eliminating the competition in New York State. So the people that are in place stay in place. And we're not the only one, by the way. A lot of data centers that are known companies, like TeraWolf is in New York, Hot 8 is in New York. A lot of our peers are actually data processing in New York as we speak. Very large companies. So we're not the only one. We are all grandfathered. We cannot expand in New York State temporarily for 12 months. Okay. And which comes to my second point, that it was pretty, smart to geopolitically diversify ourselves and expand to different states like Alabama, like North Carolina, like Texas. So we are looking at different states so we can diversify our risk always.
What are you hearing as someone that's been in the room with a Cerebras or these hyperscalers? And I think Cerebras has to guarantee 750, I believe it's 750 50 megawatt of power for OpenAI. What are you hearing out there? Because what I see is 60% of these projects are being delayed, and I've been arguing the people who have the data and have the data centers in place and have the actual power right now, it has to put you in a significant advantage, right? I mean, AI is not slowing down, right? But they need power. Yet a lot of these things are getting delayed. Now you're seeing things in New York happen. I mean, doesn't that put you in a better position? Are you getting more phone? I don't know if you could say if you're getting more phone calls from hyperscalers, but what I hear in this industry that they're coming to you. They're coming to people with power. They're in dire need of this power. Are you hearing those conversations as well as saying, hey, you know what, Michel, what about the future of North Carolina? Let us know what's going on. I mean, are you hearing things like that?
Absolutely, and we are in a much better position today because we got the validation on two levels. Level one, we got a major player like Cerebras / OpenAI, and B, we are involved in all stacks vertically. We are running now as we speak a GPU bare metal rental. So we are not a future project chat here. We are actually getting AI revenues, and we are actually capable of running a tier 3 GPU bare metal rental vertically. Power, infrastructure, and delivering data processing. So we're in a very good spot. We get a lot of demand, but of course, you always have to cope the demand with the execution. And part of the execution is the financial aspect of it. We cannot keep on and diluting to grow our business. It has to be a fair combination of equity and debt financing, which we are working on.
So talk a little bit more about that. Maybe you could explain to people, because sometimes people who know your company are familiar with it, with NeoClouds, and you call it bare metal rental. And congratulations, you guys are generating revenue off of this. Now, again, this is proven, right? You sign a contract with Cerebras. It means that now the AI transition is here, and now you have NeoClouds. Could you explain that part of the business, like who maybe your clients would be on the GPU as a rental as a service? And explain out a little bit more detail, because I know we get a lot of questions about it. I know what it is, you know what it is, but just for every investor that's looking at this for the first time, how big of a deal that is for you guys.
So I'll explain a little bit the total picture. So you start AI as a real estate, and you rent a space. Then you go to the next step, a little bit smarter. You do a colocation deal, meaning you are in AI, you build the data center, you maintain the data center, and you find a partner, a co-location tenant that will sign a deal and will handle from the CDU to the rack the management of the GPUs. And then you go to the next step, which is GPU bare metal. You buy the GPUs, you set up the infrastructure, and you run the GPUs and rent GPU bare metal. And then next step, which we are implementing as we speak, we are opening an office in Silicon Valley, and we gathered tremendous talents to do GPU as a service. Mm-hmm. So now that's the last layer. So if you put it on top of a layer of a software, then a GPU that you rent $4 an hour, GPU as a service, you're going to rent it for $10, $12, $15 an hour. Mm-hmm. And it's tremendous margins in that business. So we are setting ourselves up to be all stacks on, from power to building to co-location to bare metal to GPU as a service. We are a full stack company today, which has a much bigger value than just a real estate play.
Yes. Now, when I look, people like us and even our subscribers got into your stock very early and knew the story early on. I know that Peter Lynch, Ken Griffin are also investors. Now I'm looking at your stock here, and it's around $150 million. Might be a little bit lower than I'm too sure in cash and equivalents, right? No long-term debt. Alabama asset alone is worth over $500 million. You signed a $1.2 billion contract that could scale up to $2.5 billion, and you're predicting 300 million run rate starting next year. Yet your market cap now is falling to what, 370, even below that mark. What's the disconnect here? Because it's getting to the point where you guys have no long-term debt, right? You guys have all this cash on your balance sheet. You guys are in perfect position. I would think existing investors right now and guys like me would be, I'm buying more as well, but it just seems like, there's a big disconnect here, isn't there?
So a couple of things. I think that the last 3-4 weeks, the market AI in general has been down. And I believe that a lot of investors got a little bit scared about New York. Even though Alabama has nothing to do with New York, Alabama on its own is worth, as you mentioned or stated earlier, when the project is down, in my opinion, $1 billion on its own. So Alabama on its own is worth more than our market cap for sure. And New York, we are grandfathered. So I think that there's also the introduction of these big companies, SpaceX going public, drew a lot of money from a lot of small caps. We are still a small cap. We still are tremendous growth from the beginning of the year. I believe that investors are looking for new catalysts, debt financing, approvals, new contracts, and we are in a business that you can't bring catalyst every week. You have to execute as you bring a catalyst. We brought an incredible contract, and we are executing that contract. And I'm planning to do an event actually on site and interviews. And I will invite analysts and you, Frank, if you want to come.
Absolutely, yeah.
And to see the site, the actual site. It's very impressive to see the accomplishment. So we have a site that's going to bring about basically $50 to $60 million EBITDA a year. That's tremendous, okay, from one location, one project. Then we have a bare metal rental, additional EBITDA. And then we have the platform today and the credibility to do more business for 27 and 28. And that's where we stand, and we're in a very, very good position compared to our peers. We must be one of the basically only AI company today that has zero debt, that self-funded close to $100 million in CapEx that is worth 3x, and that still remain with $155 million cash on our balance sheet. Okay, so we are strong, no pressure, no debts. The market volatility it is what it is. The real value of our company is there, and it's real. It's translated by this data center that has a great value that I stated earlier. It's translated by the contract value as well, and also our credibility now as a AI infrastructure business. So we're very pleased. We're not going to get distracted by the volatility temporary of a market. And we work harder, we build, and we create value.
And you have executed on every level. What is some of the catalysts? I mean, I know we talked about them, right? Where all right, get New York developed. What about North Carolina? What are some of the catalysts that investors could look forward to? Because that maybe is not priced in. So, I mean, we know, okay, hey, you're building this 2027. You talked about EBITDA coming, with the contract with Cerebras. What are people missing here where you have so much more potential on this, where you said, your one asset in Alabama is worth pretty much double of your value of your stock price right now in terms of market cap. But what are some of the things like in the next 6 months? Because I think that's what people are looking for and saying, okay, why am I going to invest in this? What could happen? Because now that deal's been signed, I think everyone's okay, that there's a news and now they're executing. But what about North Carolina? What about like in the short term to 6-9 months that people could look forward to?
So in the next 6 months and before the end of the year, the catalysts are as follows. A debt financing partner to finance our growth so we mitigate dilution. That's very important. and I'm working very hard on it, and I'm very optimistic. Then, how do we exploit the footprint of power we have in our pipeline? We have New York. We know we're grandfathered for 50, 60 megawatt. So that converted is another couple $2 billion of contract, okay? And it's meaningful. North Carolina, it's a 28, 29 item waiting for the load study. And that will be a 200 megawatt, diversified, different state. And then we had this LOI we signed with West Virginia power plant that belongs to few partners. One of them is on my board, AJ Gupta. And AJ Gupta is partner with Tony Robbins. And we are trying to formulate a cooperation or partnership at the power plant. But it's a huge project, 1.3 gigawatts. So I want to make sure I do not rush to a big project that I cannot finance. Okay, I have to be able to finance the growth. So step one, we find our financial partner for debt financing. We reinforce, we validate and execute our data center with Cerebras. We expand our bare metal rental, and we move up a layer software with GPU as a service. Now we are a full stack service company. And then we set up our 2027 and 2028 platform, and we grow from there. And we have a very incredible upside potential for the next 3 years. Because if you think about 40 megawatt, in my opinion, a data center 40 megawatt is worth $1 billion, okay, plus the contract value that's worth, X, plus the bare metal, and we can grow that business 3x, 4x in the next 3 years. So from there, I believe that we have a good shot of being comparable to our peers. And you see the market value of our peers per megawatt. We are way undervalued. So
and you have contracts in place generating AI revenue for the first time. So
exactly, and I would add to certain investors call me and said, yes, but there's an execution risk. I said, come to my site and look at the beautiful tier 3 running 100% 24/7 successfully, and we are printing AI revenues now as we speak. It's not true for everyone. So we are a little bit more advanced than a lot of our peers. We also are going live on a colocation this year, where our peers got contracted earlier and will deliver later. So we are doing a very good job. I'm not worried about the level of a market cap now. It's part of a volatility on the last few weeks. I think that we have serious assets and value, and we're adding a lot of value for our shareholders.
You have such a strong runway. I wonder, and this is one of the sectors, because when I do, comparative analysis to other companies, again, some of them are signing deals, but they're not going to be available for a lot longer than yours. Do you ever see consolidation in this space? I mean, there's one space I don't think anybody's talking about where, it does make a lot of sense where, you might be able to save costs, but there's a lot of companies that aren't in your position that have these contracts, or it's going to take a lot longer. I'm just curious, have you heard anything about that? I don't know if you could say it, but it just seems like this industry is pretty much ripe for consolidation. There's just so many players in it. I think, that everyone has their struggles within it, but to see where you guys are right now, which is, that's another layer here when the stock at this valuation that I see. I just wonder if one of these other guys will come to you and say, hey, you know what, if we're together, it'd be good, because the value that you have in that future in the next couple of years, I mean, it's there, right? You have that contract in place, you have the power, you have all these companies in dire need of it. It's just a surprise to see that you're in better shape than a lot of companies. Yeah, I don't know. Maybe see consolidation in space. I don't know if you've been hearing any rumors on that.
I believe that when we run our data center from December on, which is not a long time from now, it's 120 days basically. We will get the attention of not only larger companies but funds that are investing in the space. So we are in a great position today because we are just after the validation that we are credible and we are getting AI revenues, and just before the final execution where we're going to get granted the all de-risk validation, and therefore the attention from, and then I think we'll get our worth in terms of valuation.
And I guess the last question here is when it comes to these hyperscalers, we've seen Microsoft with 3 Mile Island and say, hey, we want to restart that. That's going to take 4 years. I mean, the risks on that to get it state, local, federal approval alone is going to be difficult. And then they're buying out energy 20 years from now. So these guys aren't looking at tomorrow. They're looking at anyone that has energy pretty much that could get online in the next 5 years will sign long-term contracts. Are you seeing that as well? I mean, the hyperscalers come and say, hey, let us know in North Carolina when you're closer to it, or how far out are they going to look where, you got the Alabama contract, but you see this growth and they see it. I mean, these guys are dying need to lock it in. Do they have conversations like that? And again, I don't want to, hear if you can't say things or whatever, but I'm just curious, like being in that room, how do they talk to you? They say, hey, do they say, hey, let us know when this is ready, or let us know when this is ready? Because they are booking out contracts for 20 years plus when it comes to uranium and some other deals. And I know that they have to lock in this power. I'm just interested in those conversations.
So absolutely, as much as you become credible and you got the validation, the risk goes down and you get further away in terms of planning. They'll give you 3 years, 4 years, 5 years plan because they believe that you have a right partner for execution. So we are getting to that point soon, where we'll get, 2030, 31, 32 plan for our future sites. And I was reading, I think it was yesterday, SoftBank was saying that by 2040, 5 trillion a year will be spent in AI. So we're not going anywhere. And you need to be an executor. You need to be experienced in building data centers. We've been building data centers for 10 years, tier 1. Now we are building tier 3. And not only we are building tier 3, we are managing, vertically the process. So we understand from a power plant generation, which not a lot of our peers are managing power plants. I think we are one of a few. And so we generate power, we convert power to a setup, a data center, and then we process with the GPU servers this data. So I think we are pretty knowledgeable and credible in the space. And from that point, all we have to do is copy and paste and execute. It's all we have to do, and we'll get the valuation.
So I want to end with this because I've been covering small caps for 30 years, and I think we have a relationship for a little over 2 years now. And to see so many companies that I see this with, where people focus on the stock price, it is all about execution. To hear you say that is amazing, because all you've done since I've known you is execute. I mean, even with this contract, building this up, transitioning, everyone's like, yeah, okay, it's going to take a while, transition tier 1, tier 3. You've executed every step of the way. Yes, the stock price is down a little bit, but what I've seen covering small caps for 30 years is, that's normal. You're going to see the ups and downs. As long as you execute, that value is eventually going to be recognized. So I just want to say, we're in early. We're happy with everything that's going on. I want to thank you because you've been executing on every single level, everything you promised you delivered on. So, and I know that stock price will actually follow. So I think this is going to be a good update for investors and shareholders. But I really appreciate you coming on and let us know the catalyst coming up. I think people are going to get very excited.
Thank you, Frank, and I appreciate your time. Thank you so much.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.